This program is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Yeah, welcome back to the program. Let's just take a quick look at the home auction clearance rates from around the weekend. And what we can see across Australia, the clearance rate, 53.7%. So compared with the past, it's been well down. In Sydney, though, have a look at this. The auction clearance rate was 48.9% from 583 auctions. There were another 1,309 private sales across New South Wales. In Victoria and Melbourne, the clearance rate here, 61.7% from 446 auctions. There were an extra 1,034 private sales. Brisbane's clearance rate, 48.2% from 83 auctions, plus an extra 1,119 private sales. Adelaide sold 58% of 50 auctions with an extra 272 private sales. And Canberra's clearance rate was 64.9% from 77 auctions with 75 more properties sold privately. So let's bring in here REA Group's senior economist, Eleanor Creagh. Eleanor, look, it's pretty obvious now that there's a change in attitude going on out there, and the talk of the higher interest rates is catching up with this market.
Yeah, look, I mean, we've seen a noticeable decline in clearance rates. It's not necessarily surprising given that we've seen buyer demand moderating and the housing market is clearly cooling quite quickly. Prospective buyers at the moment have a lot more uncertainty around where future borrowing costs are going to be over the next, say, 12 to 24 months than people did really only a year ago. And of course, with mortgage rates already rising, we are seeing a pullback in buyer demand, and that is feeding into a weaker auction market and declining clearance rates.
Is there any evidence yet that vendors are starting to discount prices? That generally happens when markets start to weaken, and especially for some who might be trying to get clear of debt and or their property holdings ahead of any further falls in the markets.
Yeah, look, we are starting to see evidence that vendor discounting is on the rise, particularly in Sydney and Melbourne. Now, what's going on in those markets is that conditions have noticeably shifted or dramatically shifted for buyers, whereby new listings are back above decade averages. That fear of missing out has really subsided, particularly in Sydney and Melbourne. Buyers have a lot more time on their hands and they're regaining the upper hand when it comes to negotiations. So for much of last year, or really for all of last year, we would have characterised the markets in Sydney and Melbourne as distinct sellers' markets. So sellers really had the upper hand. There wasn't much choice out there for buyers. People had to move very quickly, and there was a real kind of sense of urgency. And that picture has just shifted significantly, really since spring last year, when we saw a surge of new listings coming to the market, but particularly as we've tracked further into this year, and we've seen that those new listings have climbed back above decade averages in Sydney and Melbourne. The balance of power has shifted back towards buyers, particularly in those markets, and vendor discounting is on the rise.
And the second thing that sellers do in these markets when things get a bit tight is not only do they potentially discount if they're on the market or going to go to market, but they just withdraw from the market completely and wait for better times to sell. Is there evidence of that? Is that what we're seeing right now?
We haven't seen too much evidence of that dynamic in play. We are still seeing continued strength in new listings at the moment, but I would say where we are potentially seeing some of that kind of dynamic come into the frame is in the auction market. So we know that, typically when it's a strong selling conditions, that vendors take advantage of that by taking their properties to auction. But we are seeing that auction volumes have noticeably reduced significantly off last year's levels, but also off levels seen earlier this year. And that's as we do shift towards that kind of buyer's market territory. As the market cools, vendors are maybe less incentivized to take their property to auction.
And one other thing, given the fact that there were so many auctions that didn't clear over the weekend, so we're talking more than 50% in Sydney and Brisbane, more than 40% or around about 40% in Melbourne, those properties still sit on the market. So the vendors have to do something to get them to clear.
Yeah, so we see that vendors shift towards private treaty sales, but we are also seeing that sales volumes are slowing at the moment. So nationally, year to date, sales volumes are around 8% versus the same period to date last year. But that's much more significant in markets like Sydney, Melbourne and Hobart, which are slowing much more quickly than the smaller capitals. So in Sydney, so far this year, sales volumes are off close to 15%. That's the same picture in Hobart, but it's a little different in Adelaide and Brisbane at the moment.
Yes, tell you what, Eleanor, Creagh, it's a changing market, no doubt, and many thanks for your time today.
Thank you for having me.